Hi, and welcome to the Outlook section of the May Housing and Mortgage Market Review. Housing and mortgage market activity continued to fall over the past month, with few indications of any near-term improvement. This weakness in the housing and mortgage market continues to be a significant drag on the entire U.S. economy. Many analysts are concerned that the negative effects of the downturn could spill over into the general economy and sharply worsen the outlook. As it stands, overall economic activity teeters on the edge of recession. But there are a few recent signs that suggest the slowdown should be both short and mild. The Commerce Department reported that real GDP growth rose at a seasonally adjusted annual rate of 0.6% in the first quarter of 2008, the second consecutive quarter of the same tepid growth. This is the weakest two-quarter period of growth since the recession of 2001 ended. But it is growth nonetheless, at least in its broadest level. The components of growth are mixed, however. First, non-farm payroll employment fell for a fourth consecutive month in April, although the drop of 20,000 was less than expected. Still, it was not a strong report, as many of the details suggested a weak overall job market. Second, real personal income growth slowed sharply over the first quarter and was up by only 0.8% from a year earlier in March. Third, industrial production edged up by 0.3% in March after having dropped by 0.7% in the preceding month. The Institute for Supply Management survey of manufacturing, however, has been below 50, suggesting a declining manufacturing sector for 4 of the past 5 months, including April. Finally, retail sales have slumped and were up by just under 2% in March from a year earlier, although this was boosted significantly by higher gasoline prices. Sales were up by only 0.2%, excluding purchases at gasoline stations. The data do not conclusively demonstrate that the economy is in recession. Still, our expectation is that the current quarter will see the slowest pace of economic activity in this cycle, with real GDP declining by approximately 1%. Despite this one-quarter decline in the economy, the combination of significant easing by the Federal Reserve and the stimulus package signed into law earlier this year, with tax rebate checks already in the hands of many households, should allow a return to positive, although modest, economic growth in the second half of the year. There are clearly some downside risks to this outlook of a pickup in activity in the third quarter. According to the Fed's Senior Loan Officer Survey, credit conditions continue to tighten in the second quarter, while oil and gasoline prices surge to new record highs. If credit conditions remain tight, then it will be more difficult for the housing sector to rebound, and other types of borrowing may decline as well. If energy prices continue to rise substantially, many consumers may cut back on other types of spending, which would offset some and perhaps even all of the benefits of the tax rebate. All of these risks could threaten an economic recovery, but at present, there are only risks to the outlook and not the main forecast. For 2008, we continue to project that modest downturn that we're currently seeing will turn into a modest uptick in the second half of the year. Growth at or below trend should continue in 2009, but there is a risk that the economy could sputter once again when the fiscal and monetary stimuli have run their course, creating a W-shaped outlook. Thank you very much for watching the May Outlook from the Housing and Mortgage Market Review at PMI.